The S&P 500 and Nasdaq this month haven't done that well and have largely remained flat, and even then, unfortunately, I have to admit that I have underperformed both indexes this month, which hasn't been super common for my portfolio. The main reasons for this is because some of my largest holdings have seen some drops in price, such as Coca-Cola, Starbucks, Apple, and even United Health Group, but this can also be good news. Because of the price drops, I took the opportunity to buy up some shares, adding to my income as well as lowering my cost basis, which is always a great thing to do. Anyways, in this video, I'm going to be updating my growth dividend portfolio, telling you guys about my sells, my buys, the new position I opened, and my future plans. Before we start this video, make sure to like and subscribe if you're new to the channel because I will be posting dividend stock videos just like this one every few days. Before we talk about my portfolio, we have to talk about my dividends for the month of August. Since my last video updating my portfolio, 3 companies paid me dividend checks to hold their stock. The first company was Amex, ticker AXP, which paid me $12 on August 10th. Apple then paid me on August 17th $4.81, and then finally, to round off the month on August 25th, Starbucks paid me $14.84, which for total was $31.65 in dividends since my last update. This monthly dividend income was low, but that is mainly because my largest dividend positions, mainly Coca-Cola and Ares Capital, didn't pay this month. So now let's talk about my buys for this month and my new position. I had 4 different stocks that I bought this month, and the first one, which is my newest position, is Microsoft, ticker MSFT, which I bought 1.5 shares for around $500 at a cost per share of 328 bucks. Now, no one actually knows this, but Microsoft was my first ever position I held, and I had it at around $270 a share, but I sold it a while ago at a loss because I didn't really know what I was doing, and to be honest, it was one of the first companies I ever bought, and I was still unfamiliar with the stock market. However, even though 330 bucks is not cheap for this stock, I also don't think it is completely ridiculous, and I hope to dollar cost average this position and make it one of my core positions going into the future. The main reason I added Microsoft to my portfolio is because I think that my portfolio lacked a bit of tech. In a recession, my portfolio should be doing pretty well with my large holdings in some recession-proof companies such as Coca-Cola, but in a bull market, especially one that's fueled by technology, my portfolio was lacking as my only 2 big technology positions really were Apple and Broadcom, so adding Microsoft to this should be really great. The second company I bought shares of was Coca-Cola, which I bought 1.2 shares of for around $72 or a cost per share of around $59.95. Now, this company is one that I've held for a very long time, and similar to Microsoft, was one of my original positions I held. Now, my cost basis for the stock, I believe, is around $63, which I must admit I definitely overpaid for Coca-Cola stock, so any opportunity I could load up on the stock at under the $60 mark, I will definitely do so. And right now, we're actually in the $58 range, so if you want to load up on some Coca-Cola stock, I don't think this is a bad time to do it. However, even though I bought Coca-Cola stock, I probably won't be buying any more for a long time because it's already my biggest position by a huge amount and I need to diversify a little bit more. The third company I bought shares of was Starbucks, ticker SBUX, and I bought a single share of it for $96.36. And again, that's just to lower my cost average because I ended up overpaying for Starbucks. My average cost basis right now is over $104, which I will admit is probably too much. So any opportunity I get to lower my cost basis on Starbucks and add some income is always a good time. The last position I bought stock of was Apple, in which I bought half a share for $88 at a cost per share of $177. Now, the reason I did this is not to lower my cost average. In fact, I actually increased my cost average by buying the share of Apple, as my cost average is somewhere in the 160s. However, I still felt like this was a great price to buy Apple, and judging by Apple's current price, which is way more than this, it seems to be paying off already. This is because Apple dropped significantly, over 10% from an earnings report, and I thought it was unfair, so I decided to buy this half a share because I thought the price was pretty good. In total, my buys were around $750 this month, and I added $8.88 of income, which is a little bit more than 1%. Now, I did sell some companies as well. As you can see, I sold all of my shares in the Nasdaq company, ticker NDAQ, for a total cost of around 266 bucks. Now, I ended up losing around $4 of income, but since I ended up reinvesting that in other companies such as Microsoft, it's not too bad. I sold this for a cost per share of $53.28, which is more than I paid for it, as I paid around 50 bucks per share, which is okay, but again, that doesn't really matter. The reason I decided to sell this is because I wanted to create a different position in a different growth stock, which ended up being Microsoft, that I thought could just perform better. There's nothing wrong with NASDAQ as a company to invest in. However, I think Microsoft over the long term will end up being the better buy, which is basically the entire reason I sold it. Now, I actually do not recommend selling positions. However, I do recommend selling positions if you're going to reinvest that money into a different position that you think is better, which is exactly what I did here. So here is my actual portfolio. You can see all the numbers, the cost basis, the current value, and importantly, the total gain/loss. Now, my portfolio has done okay since I revamped it around 2 months ago. However, it hasn't done fantastically. Certain stocks, for example, like Coca-Cola, have performed quite bad, and considering that's 17% of my portfolio, that's not a good look. However, this isn't something I'm too worried about, as Coca-Cola stock is something I plan on holding for the long term, and with dividends reinvested, this small hiccup should not matter in the long term. In addition, like I said, I'm not planning on adding to Coca-Cola anytime soon. I'm going to let the dividends do that for me while I add to other positions to help better diversify and take away from this 17%, which I think is simply too large. On the other hand of that spectrum, though, we have AVGO or Broadcom, which is up 40% since I bought it and has by far been my best stock that I currently own. Another stock that I used to own that performed similarly well was CrowdStrike. It was a stock that I bought at under the $100 mark and sold it for around $130. So it was actually a really great stock of mine. However, I sold it because I decided to invest in stocks that pay at least a little bit of a dividend, and CrowdStrike obviously doesn't do that. And that's why year to date I'm up so much. Year to date I'm up over, I believe, 30% based on just these positions, which I bought around 2 months ago. I'm only up around 7%, but that's because I switched this portfolio to a more long-term mindset and sold off stocks that didn't pay a dividend, such as Amazon and CrowdStrike. My next position, Apple, obviously is one I added to recently, and based on the price of 190 bucks, it was definitely a good buy. This is one of my favorite stocks and is going to be one of my core tech positions leading into the future, and I don't see anything wrong with it. Union Pacific is a stock that has surprisingly been doing really well in my portfolio, but again, it's another stock that I don't plan on adding to. Because it's an essential industry in the long term, especially during bear markets, this stock should do pretty well for me, especially with its long dividend history. However, I don't plan on adding to it right now, as I want to focus a little bit more on growth, which is something I pulled back on a little too much when I redid my portfolio before I started this channel. American Express is another company that's in a very similar position. It's a company that I'm just going to keep collecting the dividend on, but I don't plan on selling the stock, but I also don't plan on adding to it anytime soon. However, I am considering buying a position in a different credit card company, Visa, because that is a more growth-oriented stock, which is a little less mature than American Express and has a different business philosophy. However, it's something of a new position that I'm thinking about adding to, but I do not plan on selling American Express. Starbucks is a stock I've been talking about a lot recently, and at $96, which it currently sits, I think it's a pretty good price. However, it might drop a little bit further. I'm already down around 7.7% on this stock, which is unfortunate, but it's a good opportunity for me to dollar cost average. Overall, this is another stock that I might add to a little bit more in the future, but overall, just going to keep collecting my dividends. United Health Group is down surprisingly at 480 bucks when I paid 485 for it, and honestly, this is a very good time to buy the stock if you do not have enough healthcare exposure in your portfolio. This stock is a healthcare titan, so if you don't have any healthcare exposure in your portfolio, think about adding UNH to your portfolio pretty soon. My second smallest stock is Ares Capital, and again, this is a stock I will not be adding any more money into. However, I will continue to reinvest its dividend, and because its dividend is super large, that will mainly do the job for me. My last position, though, is Microsoft, and I only own $500 of this stock, and it makes up a measly 1.8% of my portfolio. However, this is a stock I am absolutely going to add to in the future, dollar cost averaging my way over the next few years. Eventually, I want Microsoft to be up there with Broadcom and Apple for some of my biggest positions, potentially even my biggest, as I absolutely want it to be a core position going forward. I'll probably make a video about Microsoft in the future, but there are already a ton of videos out there, and to be honest, I'm sold. The revenue looks great, their cash flow looks great, and their dividend is increasing, which is obviously something I care a lot about. I ended up paying around 328 bucks per share for Microsoft, which I talked about earlier, which is definitely not cheap. However, this is a premium business that I want to get into early and just start dollar cost averaging it. So even if it is to go down in the next few months, I'm not too worried about that. And if anything, that's a good thing for me to scoop up some more shares at a better price. Due to this, my annual expected dividends are $717.94, which is 2.6%, which is actually a little bit high for my portfolio right now. Since I'm a younger investor, I want to get that closer to the 2% range. However, 2.6 is definitely not bad. Lastly, now that I've talked about my portfolio, I do want to talk about future plans. As I've said earlier in this video, I do want to add more growth to my portfolio. When I redid my portfolio to be more dividend orientated a few months back before this channel began, I think I sold too much of my growth stocks in favor of a higher dividend yield. Although this is not a bad thing, I am a young investor who doesn't need dividends for anything other than reinvesting right now, so I want to make sure I have enough exposure to growth as well. For this reason, I'm going to continue adding to Microsoft and potentially adding a new position in Visa, ticker V, as I said previously, and maybe some other growth stocks if I can find some good buying opportunities. Going along with that, my larger dividend paying stocks, especially Coca-Cola and ARCC, are stocks I will not be adding to anytime soon, but also will not be selling. Coca-Cola is one of my core positions, and I hope I will own that for probably the rest of my life. If I cannot find a single good growth stock to add to my portfolio at a decent price, I will scoop up shares of either QQQM or SCHG to give me good exposure to large cap growth stocks. Let me know if there are any stocks that are worth looking at that I should add to my portfolio, and let me know what you think of my current portfolio. Also, do I keep adding growth stocks as I'm currently planning on doing, or should I continue adding some dividend stocks and do a bit of a mix? Let me know in the comments, and thank you to all who have subscribed recently. I am just about to hit 100 subscribers, which is crazy to think about considering I started this channel only a few weeks back. My next portfolio update video should be in about a month, however I will be uploading other videos in between now and then, so make sure to check them out when they come out. Thank you, and goodbye.